The federal government set to overhaul skilled immigration policies as it steps up the push to attract global talent. Iconic vitamins company Blackmores agrees to be sold to Japanese beverage giant Kirin, and the $200 billion future fund changes the way it invests money. It's Friday, the 28th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Very excited about today's show. So much going on over the past 24 hours. It's a good one.
Yeah, there's been plenty of news, and we've got a great interview coming up in a little bit, Sean. You're speaking with Ingrid Filmer, the CEO of Burgess Rawson, and later on in the show, towards the end of the show, I'll share a fantastic little story about Ingrid as well.
Yes, so we're talking about alternative commercial property. Think about investing in commercial property in that $1 to $4, $1 to $5 million range. It's mostly retail investors. It's not institutions. So mums and dads have a house, understand that, think, maybe I'll invest in a service station, or maybe I'll invest in a doctor's surgery or a dentist's surgery, or somewhere where KFC has an operation. All about that. And it's really taking off at the moment. So it's a fascinating chat with Ingrid.
Yeah, it's a great one for investors, really worth sticking around for. It's coming up a little bit later on. The main story this morning, though, Sean, the federal government wants to bring in highly paid permanent skilled workers through expedited visa processing rules as part of a major overhaul of the immigration system.
Sure is a big one. Under proposals outlined yesterday by Home Affairs Minister Claire O'Neil, the federal government wants inbound skilled workers to no longer be bound to their employer, making it much easier for highly paid workers to enter the country and start working. The points test used to select permanent skilled migrants will be dropped and priority given to filling skills gaps. Skilled migrants will be considered based on their long-term economic value. Now, I keep saying the word skilled, and this is all about skilled migration. Important to keep that in mind. Underpinning the new rules is a three-tier system where fewer regulations apply to high-wage workers. At the very top tier, there will be much less bureaucracy than at the bottom tier. All temporary skilled workers will have a pathway to permanent residency as part of the changes. Now, a major review of Australia's immigration system released yesterday alongside the government's announcements called the system broken and recommended a new visa for care sector workers, an overhaul of the list of in-demand skills, and an increase in the minimum salary required to bring in temporary workers. Now, the government yesterday said it will change what's called the temporary skilled migration income threshold from $53,900, it's been there since 2013, to $70,000. The review says that under a new occupational list, companies in technology, financial services, consulting and law will be able to bring in candidates more quickly. It's massive, Michael. Skilled immigration is big business. While the government has closely managed the permanent skilled migration program, this year it has a ceiling of 195,000, the temporary migrant cohort has been demand-driven. It's more than doubled in size since 2007. It stands at about 1.8 million people. Government wasn't talking about numbers yesterday, but it's fair to say this does open the door to many more skilled migrants.
This is a pretty significant change, Sean. I'm just thinking about all of these different bits and pieces. What's behind all this?
A couple of main things. There's a global war for talent. We need many, many more cyber experts, for example, more coders, more mathematicians. I mean, schools are pushing STEM subjects so hard at the moment, but it goes beyond those schools. We need more capable salespeople. We need more tradies. So that's a big reason for pushing it. Also, our system is old and it hasn't kept up with the skills needed in 2023. The review, which was done by former Public Service Chief Martin Parkinson and a panel of migration experts, says skilled occupation lists, and I quote, do not reflect current or anticipated skilled labour needs. For example, the list doesn't reflect Australia's transition to a net zero economy. No one was thinking about that 30 years ago. Claire O'Neil yesterday was typically more blunt. She just came out and said the system is broken, it's failing business, it's failing migrants, hence the need for an overhaul. Most interest groups yesterday have applauded the decision. Of course, the devil will always be in the detail, Michael.
So how important, Sean, is that increase to the minimum income threshold? Because that would then mean that it really does focus it on those higher skilled jobs, doesn't it?
Yes, the unions have long argued that with the threshold at just 54,000 or just under it, companies have been able to bring in highly skilled workers and undercut the wages of local workers. Now, whether or not that's true, that threshold rising certainly means that potentially local workers are in with more of a show, but it also means that companies can't undercut wages by bringing in skilled migrants and underpaying them for the skills they have.
It is a fascinating topic and obviously one with lots of detail that we'll need to see in kind of coming weeks and months, but it is an extraordinary story. What happened on local markets yesterday, Sean?
Well, the S&P ASX 200 closed down just a bit, 0.3% to 7,292 points. Plenty going on, Michael. Among the large caps, gaming machine manufacturer Aristocrat Leisure finished down 1.5%, and the Commonwealth Bank closed off nearly 1%. Generally, the banks went backwards while the big miners were stronger, led by Fortescue, which rose 1.2%. Corporate news coming out the wazoo, Michael. I don't know whether that's a technical term.
Oh, no, Sean.
Can we cut that?
No. You know what? I decided, I'm going to turn over a new leaf because it's just been a little bit... The last few days have just been kind of deteriorating a little bit. It feels like we've been kind of heading down into the gutter, kind of not quite at the point at which the podcast needs the little E next to it for explicit, but not far off on occasions. And here you go. I'm on my best behavior and you're busting out terms like the wazoo.
The wazoo. It's a great term though, don't you reckon?
Oh, it's fantastic. So,
yeah.
I mean, okay. The gloves are off. Let's go for it.
Righto. Number one, Downer EDI. It said it will hire a chief risk officer and cut 400 full-time jobs by the middle of next year as the contractor tries to boost profits and restore investor confidence. Number two, fuel giant Ampol came out. It outlined its second strongest quarter on record with earnings up 82%. In part thanks to strong refinery margins at its oil refining plant in Victoria. United Malt Group downgraded its underlying EBITDA guidance for the first half after reporting lower sales volumes and rising costs. Indonesia-focused Nickel Industries delivered record output and earnings results. There's a couple more big ones, but we'll talk about them a bit more in the show.
International news, Sean, what's happening on international markets? Probably coming out the wazoo too, right?
It is coming out the wazoo. I mean, the international market is more so because there are so many. It's been one of the stories which we haven't paid a lot of attention to, but it's really interesting. It's been an absolutely brutal month for Tesla shareholders. The electric vehicle manufacturer has shed more than a quarter of its value this month, and the company's fallen below the $500 billion mark in market capitalization. It was around $487 billion. I mean, that's still pretty good. Don't get me wrong. It's still the 10th biggest company in the world. And as we discussed over the last couple of days, it's gone from 9 to 10. LVMH, the luxury brand, French-based luxury brand company, has taken over. So Tesla is still massive. In fact, it's still more than 2.5 times the size of the number 2 car company, Toyota, and it's 4 times bigger than number 3, Porsche. And Michael, by the way, BYD is number 4. We talked about BYD. Do you remember what?
Yep, I remember what it stands for. BYD stands for Build Your Dreams.
Yes, it's the biggest Chinese car maker, number 4 in the world. Ford and General Motors are actually 10 and 11 respectively.
Really?
Incredible.
That I'm genuinely surprised by that. You can hear I sound gobsmacked.
Surprised. They're about 10% the size of Tesla in market cap terms.
That is remarkable.
I digress. So back to Tesla. Shareholders aren't happy, particularly since it lost $84 billion in value over 5 trading sessions since posting disappointing earnings results last week. $84 billion. There's only about 2 companies in Australia that are worth more than that, and that's just the amount that they lost in value. Anyway, otherwise on Wall Street, it was Meta Platforms' turn to impress. Meta, of course, is the parent company of Facebook. Its share price jumped more than 10% after reporting better than expected results. Of course, we saw the same from Microsoft and Alphabet earlier in the week. Across the ditch, Air New Zealand has lifted its profit forecast for this financial year thanks to strong levels of demand both domestically and across international networks. Also, US dollar jet fuel prices have fallen. That's helped. Oil fell sharply yesterday too, with Brent crude down to around $78 a barrel. Petrol prices at the moment aren't too bad. That's, well, relative to the last year or so. And this is probably more good news on that front. The fall yesterday was the most since mid-March, and it reflects pessimism about the strength of the US and the Chinese economies. Gold was also lower. Iron ore stabilised after falling earlier in the week. And Michael, the Aussie dollar is trading just over 66 US cents. That is a report with news coming out the wazoo, if ever I've read one.
Sean, I think you've earned a break. Take a moment. We'll be back very soon with the rest of the day's business news. Sean, Japanese beverage giant Kirin Corporations has made a $1.9 billion takeover bid for Blackmores, which has been given a tick of approval by the board and the vitamins company's biggest shareholder, Marcus Blackmore.
The bid of $95 a share is a 24% premium to Blackmore's closing share price on Wednesday. One of Australia's first naturopaths, Maurice Blackmore, who is Marcus's father, established the vitamin group back in 1932 and it's now the largest in the country. Marcus took over in 1975 and only left the company 3 years ago. He sort of has become a bit of a critic of it ever since. He holds 18% of the stock, so his takeout should be around $345 million. Chair Wendy Stopps said the offer represented appropriate long-term value. Tokyo-listed Kirin owns the line beer business in Australia. We're talking Forex Gold. It also markets brands like Corona, Steinlager, Stella Artois, James Bogue, etc. Blackmore's share price jumped 22% yesterday to $93.79. That's under the $95 bid. Just interesting that Kirin has bought it. Kirin in recent years has very much pushed into healthier products, probiotics and healthy foods and things like that.
I was going to say, otherwise it would be a slightly odd fit, kind of beer and vitamins. I suppose there's plenty of people that consider beer to be...
I feel like I'm back at university.
Yeah, almost kind of a vitamin. It's one of the 5 food groups, yes. Particularly for students. Yes, Sean, the $200 billion future fund, I mentioned this one at the top of the show, it's changing tack, saying the era of easy money is over and shifting to a more stock-picking strategy.
Very, very significant this. Now, the Future Fund is among the country's biggest investors, and 6 years ago, it shifted its share market exposure to low-cost index tracking strategies. Basically, if the share market went up, so too did the balance of the Future Fund. But as inflation and interest rates have risen, different parts of the markets have benefited, others have struggled. So Australia's biggest investor, or at least one of Australia's biggest investors, thinks it's time to change direction and start picking winners. The Sovereign Fund will also invest in domestic small caps for the first time. Future Fund's Chief Executive Raphael Arndt at an AFR investment summit yesterday said the Future Fund is now prepared to pay higher fees to access higher performing managers. Given the global tightening in monetary policy, that's a fee he's prepared to pay. This is all about passive versus active management, which we've spoken about plenty. The Future Fund has gone from passive to active. And just as an aside, John Pearce, who's the Chief Investment Officer of the massive Uni Super, so they'd be the 2 biggest investors in the country, Future Fund and Uni Super, he at the same conference yesterday said that he oversees a hybrid model. Mostly they do it in-house, but they do follow indexes and they do actively invest as well. Very, very interesting change.
Yeah, it sure is. And kind of along the same lines, the superannuation regulator has called out dud super products.
4 choice super fund options are delivering negative returns, 48 are charging significantly high fees, and 80 are performing very badly. Choice options are the investment streams offered by super funds that members actively opt into rather than the My Super options that they join by default. Typically, they cost more in fees than the My Super options. The Australian Prudential Regulation Authority produces a heat map of their 8-year returns annually in an effort to call out the poor performers and encourage people to swap to better funds. The latest heat map shows 20% of all the choice products that had 8-year histories were significantly underperforming the benchmarks set by the watchdog.
All right. Now, Sean, a bit more on the upcoming federal budget. As you warned us yesterday, we can expect quite a few of these kind of announcements between now and the budget. The government will spend $3.8 billion to strengthen Australia's defences in the north of the country.
It's part of the response to the threat of China outlined in the Defence Strategic Review released last week. The money will be spent over 4 years. It's part of the total figure of $19 billion outlined in the review. Also yesterday, the Albanese government said it's considering paying single parents extra welfare until their youngest turns at least 13 years of age. At that age, the government believes a child should be sufficiently independent for a parent to re-enter the workforce. Clearly haven't met my children. Anyway, currently the payment's cut out at the age of 8. And Finance Minister Katie Gallagher yesterday said the budget will have a cost of living package to help Australians struggling amid high inflation and rising interest rates, but she didn't say whether the rate of job seeker will increase.
Sean, Newcrest Mining outlined slightly disappointing output results for the March quarter yesterday.
Yes, Newcrest Interim Chief Executive Sherry Dewey said that both gold and copper production is expected to increase in the April to June period to meet full-year guidance of between 2.1 and 2.4 million ounces, but it didn't have a great March quarter. Now, the board of Australia's biggest gold digger is likely to make a decision on the Newmont Resources $29.4 billion bid next month. Newcrest share price fell more than 2% yesterday. It was the worst performer of the large caps. While we're in the gold sector, Northern Star said it's on track to meet annual guidance, but it has lifted expected production costs. Other gold miners to disappoint yesterday, at least in terms of output, included St Barbara and Regis Resources.
All right, turning to international news now, Sean, and China's President Xi Jinping has urged his Ukraine counterpart, Volodymyr Zelensky, to negotiate with Moscow in the first conversation between the leaders since Russia's full-scale invasion more than a year ago.
It's promising. In an almost hour-long telephone call that Ukraine's president described as long and meaningful, Xi told Zelensky that he would send a special representative to talk to all parties to seek a political settlement of the war. That's according to China's foreign ministry. Dialogue and negotiation are the only way forward, Xi added, according to a report in the Financial Times. But a readout of the call from Zelensky's office avoided any reference to negotiation and instead expressed hope for China's active participation in efforts to restore peace. Ukraine has already dismissed a peace plan put forward by China back in February because it didn't stipulate the restoration of its territorial integrity and the withdrawal of Russian forces from occupied territories. But Zelensky has long sought a conversation with Xi to put forward Ukraine's cause and persuade China's leader to exercise pressure on Vladimir Putin, Russia's leader, to rein in the war.
A big story. And Sean, we've saved a pretty chunky one for the end as well. Britain's competition watchdog has blocked one of the biggest deals in the world this year. That's Microsoft's $69 billion bid for Activision Blizzard.
In fact, it was going to be the biggest ever deal in the gaming industry, with a tech giant trying to buy the creator of games and operator of esports leagues. The Competition and Markets Authority in the UK said the deal would harm competition in cloud gaming, though it did provide some hints of how maybe they could get around that problem, such as sell the blockbuster title Call of Duty. Not sure whether Microsoft will want to do that one, given how popular Call of Duty is. Microsoft said it will appeal the decision. Now, European and US regulators are yet to hand down their views on the deal. It is a massive deal, and everyone is watching it with great interest.
Have you ever played Call of Duty, Sean?
This house. Many people in this house has. I haven't. Have you?
Oh, yes. Yeah, no, I've spent much time when I was younger playing quite a bit of Call of Duty. Not particularly good at it, but no, it's good fun. I can imagine you would have a house full of Call of Duty players.
Yeah.
I'm amazed you never got roped into it, just because you always need one player who's worse than everyone else, just so that you can kind of feel good about yourself. And I suspect that would be your role in your household.
So I once went to one of those arcades. It was a very fancy arcade, and in the end, 6 of us sat down and played, the shoot 'em up. So we all sat in a row and we had guns and we were shooting the enemy on a screen. It was this sort of big enclosed place. It was quite an amazing thing. By the end of it, they said the number one sharpshooter was, contestant number 6. And there I am sitting in booth number 6, and all the kids are like, oh, this is rigged. That's just stupid. Like, they could not consider for a moment that I might be a good shooter.
Oh. Sean Deadeye Aylmer.
Yeah, that is too right.
That is fantastic. You've waited. We've worked together for a while now. You have waited quite some time to bust that one out. My respect for you has just gone up immeasurably.
And then we said, well, when have you ever shot a gun? And I started shooting rabbits stories back in the farm outside of Orange, and the kids are like, you can't. And so then I was castigated for shooting rabbits. So
you lost all of the credibility you just earned.
Yep.
All right.
Yep.
Well, now, Sean, up next is the Fear and Greed Daily interview. We mentioned it earlier, speaking with Ingrid Filmer, the CEO of Burgess Rawson.
Yes, all about investing in alternative commercial property, kind of that $1, $2, $3, $4, $5 million mark, things like petrol stations, fast food outlets. Basically what you do, you own the property or you buy the property and then you lease it back to the service station or to KFC or someone like that. Really interesting world of investing.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. But Sean, before we go, I need to mention Ingrid.
Yes.
We had a little chat to her after conducting the interview, and she's self-nominated as a MIA, Most Enthusiastic Advocate of Fear and Greed.
Wasn't it fantastic? What a buzz for us to have someone say that.
Absolutely. And not just, and you know what, this is why we are awarding Ingrid the week's MIA for the entire week, because it's almost another class of MIA, MEA, Most Enthusiastic Advocate. It's like the corporate MIA of the week, because she's done what every good boss would do, which is make all of her staff listen to Fear and Greed as well, which is all we've ever asked for, is just for people to kind of force their colleagues to listen.
Yes, if everyone listening doesn't force at least 5 people to listen, well, we're disappointed.
That's right. And you rule yourself out of contention for the MIA. But this week,
Ingrid, above and beyond.
You are the MIA for this week. Thank you very much, Sean.
Thanks, Michael.
It's Friday, the 28th of April, 2023. Make sure you're following the podcast. Join us online, of course, on Instagram, on LinkedIn, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson. That was Fear and Greed. Have a great day.